the total cost remains unchanged, so that would not change. But then in between, when the output level reached 180,000 units, at that time there was an increase of 30,000 which was included. Then now it says that what is the estimate of total cost for an output of 175,000. So that is what is asked in the question. From 180,000 units, there is an addition of $30,000 into the cost. That has to be adjusted, but because the high-low method talks about one component being fixed, so taking the data at the original level, even before including this additional cost, whatever is the original data, considering that this relationship that there is a component which is fixed and a component which is variable, that applies there. So whatever adjustment which was made at 185,000, so there we need to make the adjustment. When we look into that, what is the high level? The high level is at 190. So this addition of 30,000 is also applicable, because after it crossed it, once it reached 180,000, so from 180, 185, 190, all these levels, we see that the 30,000 additional amount is included. That has to be first eliminated. Then we see the low level is at 160. So first we need to make that adjustment, the adjustment of eliminating or removing that addition of 30,000 fixed cost, because when the data originally which was considered for forecasting, it did not have this one additional item, so that part has to be removed, and then the rest of it what we have learned about that technique, it holds good. So the high level, let's start with the high level first. We have output and then total cost. Take the high level, take the low level. We see at high level, the output is 190,000 and the cost is 2,810,000. Low level is at 160,000. Then the cost is 2,420,000. Find out the difference. This would be the variable component. $13 per unit. Find out the fixed cost. Select any level. Let's select at 190,000 units. Total cost is equal to 2,810,000. From this, we have to deduct the variable cost. Variable cost would be 13 into 1 million. Sorry, 190,000. The question further asks us to find out the estimated total cost for an output of 175,000. The estimated cost for, see, now we also have to remember that fixed cost at 190,000 units will not be just 340,000, because from 180,000 units there is an addition of 30,000. So the fixed cost part of it is 340,000. Let's also mention that fixed cost at 190,000 after including 30,000 would be 340,000 plus 30,000. So that would be, this is applicable only from the output levels starting from 180,000 units. Because 190,000 is after 180,000, but 340,000 is the fixed cost which is applicable for all the activity levels below 180,000. We are now estimating the activity level of 175,000. So at 175,000 units, the fixed cost level would be only 340,000. So let's write estimated total cost for an output of 175,000 units. This would be, the first part of it is variable cost. Variable cost will be 175,000 into 13. What about fixed cost? How much would be fixed cost? Fixed cost is 340,000 because that's below 180,000. Therefore, the total cost would be total cost is equal to 2,615,000. So this part we need to be careful about it. What is the fixed cost at an activity level below 180,000? What is the fixed cost at an activity level above 180,000? Since we have selected the activity level at 190,000, so we made the change here and then brought it up to 370,000. But otherwise, if it is anything below 180,000, like this 175,000, we should go with 340,000. So we see that after 145, this is 145 we've done. Then 147 is one more high-low method question. So let's quickly take it up. In between one high-low method, yesterday I said there is an adjustment. We'll do it in the next class. So we will also visit that particular question. The following budgeted information comes from the accounting records of Ross Limited. Production units, budgeted cost. What would be the budgeted cost for 1980 units? Let's quickly see. You, it's a simple question, no adjustments, no complications. So try it out. Only two levels are there. Select one to be as the high level, the other one to be as low level, and then quickly finish it off. Budgeted cost at 1980 units. First, find out what is variable cost. Variable cost would be 1980 into 6. Yesterday we have looked into what is question number 133. We've solved that. 134, 135 we didn't. 136 we have finished. 137 no, we didn't take it up. 130. Did we do 138? No, we didn't. So let's take it up. 138. This is also a high-low method. But I said there is an adjustment. We'll take it up tomorrow. So let's start with 138. Question number 138. A, a company is estimating its cost of production wages based on past information. The total wage cost incurred by the company in the previous 2 months were as follows. Month 1 and 2, labor hours work, total costs. At the start of month 2, the company increased all wages by 5%. The company uses the high-low method to separate the total cost into their fixed and variable elements. What is the estimated total wage cost if 205,000 labor hours are worked next month? The way we have done the first question, wherein the adjustment of that 30,000 which was added halfway through. So here also we see that there is an increase of 5% in wages made at the beginning of month 2. So month 1 is unaffected. So whatever was that 5% increase, that has to be adjusted and proceed further. Then um, we can add it back when we are calculating the estimated total wage cost um, at 205,000 labor hours. So that is what has to be done. Let's start. Question number 198. Now this is in that previous question, but when we have done that, so that was basically a fixed amount, which was 30,000 was the fixed amount. Here we see it is different. That is in terms of percentage. So the figures which are given at the for the second month, the amount stands at 2,982,000 after adding 5% increase. So the figure which is appearing in the question is at 105%. Because 5% was already calculated and added, that is included. So that has to be eliminated. A figure which is at 105% is 2,982,000. So 100% is what is the amount. So let's present it. um, Wages, we see that it is 105% is 2,982,000. But we want it at 100% after eliminating that 5%. So this is what percentage. So how do we calculate? We have it as is equal to this into 100 into 2,982,000 divided by 105%. So 2,840,000. Now the rest of it is the same. We have labor hours here. And the total cost. Present it as high. Then we have it as low. Um, High is 190,000. Low is 160,000. The costs are, after eliminating the a 5% increase, 2,840,000, and here it is 2,420,000. 14 per hour. Select at 190,000. 2,840,000. The variable cost would be 190,000 into 14. The resultant figure is fixed cost. This would be the fixed cost for the first month, but not for the second month, because the second month, a 5% increase has to be included. 180,000 is the fixed cost. That is correct. But then that 180,000 is applicable only for the first month, because from the second month onwards, there was an increase at the rate of 5%. So we need to calculate that 5%. is equal to 180,000. We have to add 5% increase. So to the 100% amount, 5% is added. So it would be 105%. 105%, or we can write it as into 1.05. So this will be for the second month. Now we are asked to estimate it at 205,000 labor hours. So estimated total wage 205,000 labor hours. First calculate variable cost, which would be 205,000 into 14. Then fixed cost. What will be fixed cost? What will be fixed cost for 205,000? Because the second month, when they reach second month, the labor hours increase to 190,000. So 205,000 is above 190. So from 190,000 labor hours onwards, the fixed cost is 189,000. So we take we check this one. This 205,000 is above 190,000. So at 190,000 only, we got the fixed cost to be as 189,000. So for that reason, for 205,000 labor hours also, the fixed cost should be taken at 189,000. Add them up, that would be the total cost.
Ma'am, I have a question.
Yeah. There is no, the answer is not there, no? What we got? Anything nearest to the
Ma'am, I still have a question.
Ma'am,
When we calculated the wages inflation to be a 5% increase, we took the
because
total.
even the variable cost also will increase. Same thing. So here it would be yes. It would be into, because this is total amount, no? It is not just the fixed cost. It is the total wages which is rising by 5%. So this should also be multiplied into 1.05. That's right. This is total wage. So 1.05. Do we have this answer? Yeah. Yes. So the variable cost per unit is 14. But then from 190,000 units onwards, variable cost per unit also has to be calculated. So I'll put it here, this place here. Since the total wage was increased by 5%, variable cost also increases by 5%. Variable cost is equal to 14 into 1.05, which would be, how much would that be? 14 into 1.05. 14.7. So that part will be 14.7. So 14.7 into 205,000 fixed cost and then total cost. That's right. I think that's it. We have finished all with all of high low cost method questions. At 141 we finished no yesterday. 141 did we? No. Did we? We didn't know.
No.
You are able to see this. So one for. Let's take. I think this would be the last high low method question. After that, we'll go to the next method. After 141, we see 142 is finished. 143 is not this one. 140. Five is done. 140.
Ma'am,
Mm-hmm.
actually, I have a doubt in the previous sum, ma'am.
Uh-huh.
Ma'am, wages are considered as a direct cost, so it would be a variable cost. So why we are including that
Not
5% in the
necessary.
way?
Not necessary because wages could be direct wages, indirect wages. So this is total wages. That's the total wages cost. Yes, if it is mentioned as direct wages, it would be only a variable component. But we also have indirect wages. So the total amount of production wages which are incurred is these amounts are given. See, if such a situation is not there, generally from the data, whatever is mentioned, production wages also is taken to be as the direct wages if, in the absence of any other information. But here, when we look into that, we do not see that there is a proportionate change. If it is at 160,000 to 2,420,000, at 190,000, how much should it be there? If we calculate that, if it is the same thing, then that becomes variable. If it at 160, if at 160,000 this is the amount, at 190,000 how much should be the amount is what we have to look into. Of course, this is a direct question about high low method, so we don't get into that. But then in situations where we have to find out, ascertain about whether this is a variable cost or a semi variable cost, how do we do that? Which we have to take it up as 190. I'll just take 190 into, because zeros I'm eliminating, 2,420,123 divided by 160. So the figure comes out to be as 2,873,750. But that is 2,982,000. So we see that the amounts are not proportionate. Because the amounts are not proportionate, we get to understand that that is a semi-variable cost. It is not a fixed cost. Anyway, that we rule it out, because if it were fixed cost, both of them would be the same. It is not same. It is not even variable cost because it is not proportionate. Therefore, it is semi-variable cost. That is how we have to confirm whether it is variable or semi-variable. In the absence of any other information, in certain situations like preparation of cost statement and all, the term production wages is always assumed to be as variable. It is taken as a synonym for direct labor. So whenever it is direct labor or production wages, we understand both of them to be the same. So we take it as a variable. Why are we not taking it variable? Because it's not proportionate.
Okay, ma'am. If we are encounter such cases like this sum, do we need to calculate that 5% for both the cost, fixed and variable cost, or like only for variable cost, ma'am?
Both of them we have to do, because this is overall 5% increase in the total wages. No, so the mention says about the company increased all wages by 5%. But we have also done one question about wherein they say it is only the fixed cost which was increased by 30%. Therefore, we kept that variable cost unaffected. Here it says that there is a stepped increase in fixed cost. Only the fixed cost has increased by 30,000. You see that this one, a stepped increase in fixed cost of 30,000. So therefore, when we have calculated variable cost is unaffected, only the fixed cost is increased by 30,000. But the previous question which we have solved, it says that all wages got increased by 5%. Therefore, the variable component also has to be increased.
Okay, ma'am. Now I understood.
Yeah. It is all wages by 5%. So good question. Why are we doing it as semi-variable when yes, because I mean normally when we take up the cost statement questions from mostly in the graduation level, we would not be referring to Kaplan material and all. We just go with the Indian author textbooks. There's nothing wrong with that, perfectly fine. But that term productive wages, production wages are used in place of direct wages. So there that possibility of getting confused arises definitely. So good question. Question number 140. The budgeted total cost for two levels of output are as shown below. Output is given as 25,000 units, 40,000 units, total cost is given. Within this range of output, it is known that the variable cost per unit is constant, but fixed cost rises by 10,000 when output exceeds by 35,000. Same logic. See, the first level of 25,000, it would be the same, but once it exceeds 35,000 from 36,000 units onwards, it increases after it exceeds 35,000. So the fixed cost alone increases by 10,000. So at 40,000, that 10,000 additional cost which is included should be first eliminated and then the rest of it follows. Take any activity level. Let's take it at 40,000. At 40,000 units, total cost is equal to this is fixed cost at 25,000 units. But once fixed cost till or up to, let's put it as up to 35,000 units. Once it crosses 35,000, fixed cost will be 76,000 plus 10,000. From 36,000 units or above 36, above 35,000. Let's put it as above 35,000 units. So we are asked to calculate it at 36,000 units. So at 36,000 units, variable cost is equal to 36,000 into 2.7. Fixed cost is 86,000. Just add them up. So that would be total cost. Okay, the question is asking only for budgeted output, fixed total fixed cost at budgeted output. So the answer would be only this one. Of course, we've done one step extra, doesn't matter. The fixed cost from 36,000 units onwards, it is 86,000. Okay, we'll see the next forecasting technique. So thoroughly, all the questions which are covered included on high-low method, we have completed the numerical questions. All of them we have taken up. The next technique. See, there are three techniques covered in your syllabus. It's not only that there are only three techniques, but in the syllabus, your syllabus, there are three techniques which are covered. So the first one is high-low method. We finished with high-low method. We have linear regression. We have time series analysis. Then another two techniques are there. Question number 134. ZPLC has found that it can estimate future sales using time series analysis and regression. The question says that these two techniques are used. Both of them are included. The equation is given. Some other information is given, and the question proceeds further. But then fine. But what are these techniques also? Let's quickly go through that and then come back to this question and then take it up. So we have learned about high-low method. Based on the historical data, we select a high cost, low cost. It is applicable only in case of semi-variable cost because fixed cost need not be estimated. It would remain same until it reaches maximum capacity. Variable cost varies proportionately. So it is only useful in case of semi-variable cost. So all the issues related to high-low, we have finished doing that. Another technique is time series analysis. Time series analysis. What are the steps in time series analysis? Basically, over a period of time, the data is considered to understand what is the trend which is present in the data. Once the trend is established, that trend can be taken up to estimate the future values. Time series analysis, the first step talks about steps in analyzing time series with seasonal trends. Identify any underlying historical trend. So it establishes a trend. So once the trend is established, that trend will be used to estimate the values for the future period. Then forecast trend into future, identify any seasonal variations, make the adjustment for the seasonal variations. See, sometimes we see that the data moves in a particular fashion. For example, we see that for some XYZ company, they have observed that year after year, period after period, their sales are growing. Are they growing randomly? Is what is first studied. If they are growing, if they see that there is some growth in that, how are they growing? What is the pattern in which they are growing? There must be something from over a period of time. It is not just one period to another period, but studying the historical data for over a period of time, considering that they understand that the data is changing in a particular fashion, in a particular manner, it is changing. So, what is that pattern is observed? What is the trend at which it is changing is what is understood. Use the same trend to forecast the data. We will see how we can establish the trend or we are not asked to establish the trend. How do we use this trend to forecast the data for the future? A time series has 4 components. The first one is the trend has to be established. Then the seasonal and the cyclical variations are taken. Any adjustments? After that, any more additional, that is residual variations which are there, those things also are incorporated, included into the, they are included into the data and the forecasting is taken up. That is under time series. A period of time is taken, the data is observed, the data is studied and put to test to establish the trend. After the trend is established, these variations, that is the seasonal, cyclical and residual variations are incorporated into this data and that is taken to forecast the data for the future. Because this question is including both of them, therefore I will give you the explanation about both of them. The next technique is about linear regression. What is linear regression? Linear regression used for forecast for budgeting purpose include, this one includes the time series and trend line as an alternative to moving averages. Total cost is estimated. It is similar to how we are estimating for semi-variable cost, but this total cost is given by an equation called as y is equal to, there is a particular pattern in which the total cost varies. So the trend when they are establishing, that trend is presented in the form of a regression equation. Linear relationship it has. The linear regression it can be established by an equation called as y is equal to a plus bx. So this is used to this equation, once it is established, this equation is used to forecast the data for the future. Here y is total cost, a and b are two constants. Okay, x is the variable which is taken as the total cost keeps changing whenever there is a change in the number of units. So x becomes the number of units or output or volume that is taken as x. So when x changes, one part of the cost changes. With the changes in x, variable cost varies. No matter whatever is the value of x, fixed cost remains unchanged. So when we split this into this two parts, the first part indicates that this is fixed cost. The second part indicates that this is a variable cost. The second part indicates this is variable component, because the second part keeps changing whenever the value of x keeps changing. Therefore, the forecasting will be taken up with the regression equation called as y is equal to a plus bx. How do we find out what is a and b? We have, did you learn regression analysis in your graduation program? What statistics did you cover? No? Sorry, I didn't get you.
Not as far as I can remember.
Sorry, I didn't get you.
We didn't do it, ma'am.
Okay. But definitely, as a part of your graduation program, you will do regression analysis. No matter what the paper title is, regression is a part of the curriculum in any BCom BBA program. So you will definitely get to learn that. So how do we calculate A and B? Usually, at the forecasting level, the values will be given. Otherwise, we use these um, equations. A is equal to y bar minus b x bar, which also can be written as sigma y by n minus b sigma x by n. B is equal to this another equation. First, A and B are to be calculated. Now, A is fixed cost, B is variable cost per unit. Variable cost per unit is multiplied into the output, into the number of units to find out the total variable cost. So, total fixed cost plus total variable cost is equal to total cost. So, these are the two techniques. The first technique about time series analysis, a data for a time series is taken into consideration. It is observed to establish the trend of the data. After the trend is established, then the other variations which take place on account of seasonal variations, cyclical variations, residual variations are incorporated into the trend at the time of forecasting the data. Regression analysis with the help of a regression equation, which is y is equal to a plus bx, forecasting is taken up. Y is equal to bx talks about the trend of the data. The trend of the data um, is fit into an equation, into a regression equation called as y is equal to a plus bx. So this y, so for any output level, for any value of x, we would get to understand what is the total cost or what is the value of y. That is how it has to be done. So we also have the advantages and disadvantages. Advantages and disadvantages of time series. Advantages part of it is forecast based on clearly understood assumptions. Reliability of forecast can be assessed as such as each successive period finishes. forecasting accuracy improves with experience. What are the disadvantages? Assumes what has happened in the past is a reliable guide to the future. That part of it is little, see what happened in the past, not necessary that it always would happen in the future also. So that becomes a disadvantage there, because they go with an assumption that whatever was the trend in the past, that will continue into the future as well. Assumption that a straight line trend exists. So whenever they establish the trend, that is plotted on a graph paper. So at this activity level, what is the cost? So something like this they establish, um, even if it is not in a straight line also, even if they are slightly away from that, most of the values which are in the straight line, a line is connected here, so they understand that this is the pattern in which they are growing. So some of them may be slightly away from that, but then on an average they take into consideration. So they assume that it is a straight line trend exists. Once the trend is established, so let's say that now period 1, period 2, let's say, um, if they want to estimate the value for this period, maybe this is 10th period, what do they do? How do they estimate? Just extend this line until the 10th period. That's it. The line is extended. The trend line is extended for the future period, and that would be the forecasted value. So that is how, using the time series analysis and the trend value, the trend line is extended to use it as a forecasted value. Okay. Assumption that seasonal variations are constant. Now we see question number 134. 134 says that they are using both time series analysis and regression technique. The following trend equations. They have already established an equation called as y is equal to 25,000 plus 6,500x. Y is the total sales units per quarter. X is the time period reference number. Z has also derived the following set of seasonal variation index values for each quarter using a multiplicative proportional model. Then we have quarter 1, 2, 3, and 4. Some percentages are mentioned. Assuming that the first quarter of year 1 is time period reference number 1, what would be the forecast sales units for the third quarter of year 7? Let's take the question to the Excel sheet, and from there we will. Let's write what is the equation. Y is equal to 25,000 plus 6,500 x. When we look into this particular question, the first set of data is y is equal to 25,000 plus 6,500 x. Y is equal to total sales units per quarter. X is the time period reference number. Regression technique is taken, but this time regression technique y is not total cost. What did they mention? Y is the total sales units per quarter, and x is representing the time period reference number. So x is the time period. This part x is time period. How are the time periods mentioned? Time periods are mentioned as quarter 1. This is 1. Quarter 2 is 2. Then 3, 4. So we cannot fit in place of XQ TR1. I mean that will not allow us to take up the mathematical calculation. So it could be quarter, period, month, whatever it is. So that should be converted into a number, a numerical value. So they are also taking that as X is the time period reference number. And what is that reference number? The question below says that assuming that the first quarter of year 1 is time period reference number 1. So year 1, quarter 1. 1, 2, 3, 4. Then like that, if we proceed further, how many years they have to go on till third quarter of year 7. I'll just quickly write it here because it's only dragging part of it. I will also put it here. We want it till year 7. Okay. At a stretch, I will drag it. Then we get year 7, 1, 2, 3. So this is year 7, 1, 2, 3. So year 7, quarter 3 is the reference number will become 27. I hope you got the point. Because we cannot fit the time period into the substitution part because X represents the time period. So time series analysis, the time period is taken into consideration. They are taking up the time series analysis, but also mixing the regression technique. Both of them are taken into consideration. The regression technique is given by an equation, regression equation, y is equal to a plus bx. And this time y is taken as the total sales. So total sales for each period is estimated or forecasted with the help of an equation a plus bx. X is the time period. Time period is given as quarters. But quarter 1, quarter 2, quarter 3, year 1, quarter 1, so on, it cannot be substituted. Therefore, each quarter is given a number. The reference number is given as, assuming that the first quarter of year 1 is time period of reference number 1, what would be the forecast sales units per year 7, third quarter, which is 27. I hope you got the point there.
Yes, sir.
Yeah. Now, um, reference number for year 7, quarter 3 is 27. What should be done now? We are asked to forecast sales units. So when we are asked to forecast sales units, how would we do that? The value of y is equal to 25,000 plus 6,500 into x is now 27. So let's do um, forecast of sales units. Is that all? First the trend, first the forecasted value is taken, but the question doesn't end there. It also says that, I'll erase this red lines so that the screen will be clear. The question says that why is the total sales exceeds the time period reference number? Z has also derived the following set of seasonal variation index values for each quarter using a multiplicative proportional model. So after the trend is established, after the forecasting is taken up, it also has to include various variations, seasonal, cyclical, and any residual variation that also has to be incorporated. So now here for the quarter 1, it says that it is 70%. Quarter 2, it is 90%. Quarter 3, it is 150%. Quarter 4, it is 90%. So which quarter are we talking about? We are talking about quarter 3 because that is what we have calculated. Quarter 3 is the time period for which we are calculating. Quarter 3 variation which has to be included is 150%. So now proportionately we have to make the adjustment and do the calculation. So quarter 3 variation, seasonal variation is at 150%. So it's 200,500 into 150%. Okay. So quickly let's look at what is the solution for this one. The solution goes like this. They have taken both techniques about time series analysis and regression technique. Time series analysis, a time period is taken into consideration and the trend is established. After the trend is established, all the variations, whatever has to be incorporated, they are taken into consideration and the value is adjusted. After that, um, by adjusting that, the forecasting is taken up and the data is forecasted for the future. Now it is just not the time series wherein only the time period is studied and the used to establish the trend. They are also depending on the regression equation. Regression equation y is equal to a plus bx. So that is taken to estimate the forecast the sales unit. Sales units are given as the trend is established by an equation as 25,000 plus 6,500 x, where y is the sales units, x is the time period, time series analysis. But then time period cannot be substituted into that. Therefore, we give a reference number 1, 2, 3, so on. So when we take it as 1, 2, 3, so on, we have to go until the 7th year, third quarter. So just number them until 7th year, third quarter comes out to be as 27. So just substitute in place of x 27, as simple as that. Now, if there was no variation, this would be the answer, 200,500. But now we see that there is a seasonal variation applicable for each of the quarters. Quarter 1 data would be only 70%, quarter 2 it is 90%, because there's a seasonal variation. We do not see the sales of the product, some of the products, the same throughout the year. During winter season, we see that uh, moisturizing creams and all, more number would be sold. But if that is taken to be in the other seasons like summer and winter, we do not see so much of sales happening or very little happening. So the sales pattern is not uniform throughout the year for some of the products. Some of the products like maybe detergents or groceries. What do we see? We see that it is uniformly the same throughout the year. Okay. But here they have observed that there are seasonal variations and these variations keep varying in each of these 4 quarters in this particular pattern 70, 90, 150 and 90. So since we are taking up the third quarter estimation, third quarter values change by 150%. So if it is 150%, it is 300,750 units. I think it's a very simple question. Okay. High-tech PLC is a mobile phone repair shop. The director is interested in the relationship between the amount that is spent on advertising and the sales revenue that is achieved. They have established that the regression equation y is equal to 150 plus 7x can be used, where y is the total sales revenue and x is the advertising spend. Which one of the following statements is correct? Correct interpretation of the relationship. What's the equation? This is question number 135. The equation is given as y is equal to 150 plus 7x, no numerical calculation. X is what? X represents advertising spend. Y is the total sales revenue, and X is the advertising spend in $1,000.
And D,
Which one?
last option. D.
Last option, D. If no money is spent on an advertisement, that's right. Because if advertisement becomes 0, 7 into 0 is 0. So 150, 150. Okay, 150,000. First one, 7,000 is spent on advertisement. So such a question, we have to very quickly go through all the options because we do not know what is the right thing. Now that one of you have given the answers, we are directly jumping down. But in the examination, how do we do that? We have to test all of them. Otherwise, we would not know what is it, because we are not starting from the question. The question is only limited until that equation. Options are there in the alternatives are given. Which option is correct is what has to be tested. If 7,000 is spent on advertising, 7 sevens are 49, 49 plus 150, 199. So A is not correct. B, if no amount money is spent on advertising, sales revenue would be 7. Sales revenue would be 150. It's not 7. 7 into 0 is 0. 0 plus 150 is 150. C, if 150,000 is spent on advertising, then 7,000 sales revenue per month will be generated. This is per year, no? These details are per year. So 157s are 15 sevens are how much is that? 105. 105 in so 255. 255 divided by 12. So then also this is not correct. See, if at all, if this is to be, I mean, in the exam we have to test all of the options. If 150,000 is spent on advertising, 7 into 150. So 7 into 150 is how much? What did I say? 7 into 150 plus the regular 150,000 is also there. This is 12,000 divided by 12 because per month we have to take. So here is equal to this divided by 12. The answer comes up to be as 100. But here 7,000 is the sales revenue per month. Then again that is also wrong. So the last one is correct.
Ma'am?
Yeah.
Ma'am, is the Excel, are you doing the sum in the Excel sheet, ma'am?
What? Oh, really? There's nothing. I'm just discussing the. Of course, there was no calculation. Thank you. A bit it doesn't work out. B bit also doesn't. C, I'm just looking into that. 150,000 is spent on advertising. 150 into 7 plus 150, another 150. We get that to be as 12,000 per annum. Per month it is 100,000. But here it says that it is only 7,000 sales revenue per month. So C is also not right. D will be the right answer. Answer is equal to D. One 136 high low, no? Okay. 137. 137 into 150 is 100,000. 150 into 150 is 100,000. 100,000 into 100 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 is 100,000 Let's take this to the Excel sheet. 137. Production overhead costs at company MZ Limited are assumed to vary in line with the number of labor hours worked. The following data has been collected. Year is 20x4 and x5. Overhead production overheads are given. Number of labor hours are given. Cost index is also given. If the line of best fit is a trend line of best fit based on current prices is calculated as y is equal to 127,000 plus 18.6x. Calculate the total expected overhead cost in 20x6 if expected production activity is 4,600 labor hours and the expected cost index is 225. Question number 137. Let's quickly write what is the equation. Um, so y is given as 127,000 plus 18.6x. Calculate the total expected overhead cost in 20x6 if expected production activity is 4,600. So otherwise, if this equation was not given, what is the alternative? What do we do if this equation was not given? From this set of data, we would take one to be as high, another one to be as low, identify what is variable cost, what is fixed cost. That also can be fitted into this particular equation, 127,000 plus 18.66. I'm just scrolling up or scrolling to the high-low method, and how do we fit that is what I will show you. The basic one, the first one, let's see. Here we got the variable cost per unit as 150. This is 150. How much is fixed cost? 1,500. With this information also we can write an equation, that is y is equal to 1,500, that is fixed cost, plus 150 x will be the number of units or number of hours or whatever is that. So like this an equation can be established. We just have worked out on separating the variable component and fixed component, but with that set of data, if we were to frame an equation, because all these techniques are using I mean depending on each other. So let's say that if we are asked to separate the semi-variable cost as variable component, fixed component. With that, those separated values, we can frame a regression equation which looks like this one. Y is equal to 1,500, which is fixed cost, which is a constant. It doesn't get affected by changes in any other variable. But variable cost keeps varying with the changes in output. X is output. So the equation can be framed like this: y is equal to 1500 plus 150x. So likewise, here in this example, there are two different activity levels, that is 4,200 labor hours and 4,700 labor hours. At these labor hours, these are the costs which are given. So they have finished doing the calculation separating the variable component, fixed component. We are now provided with the equation y is equal to 127,000 plus 18.6x. A major part of the calculation is already finished and we are just provided. Let's say for you in the example, it may start with that without giving an equation. So you only have to find out the variable cost, fixed cost, frame it into an equation, then take it up further. After this is done, then we need to um, estimate it at some 4,600 labor hours. So at that level, we have to estimate that. So 4,600 will be X. X is the number of labor hours. X is the number of labor hours. Therefore, in place of X, it will be 4,600. Find out what is Y. Okay. After that, uh, something else is also given. What is given? It says that calculate the total expected overhead cost in 20x6 if the expected production activity is 4,600 labor hours and the expected cost index is 225. That is, the index number indicates whatever is the changes in the price and cost. Now the cost index says in 20x4, the index number, the index value stands at 189. Then when it has come to 20x5, the index is now 205, 205. Now for the year 20x6, the index number has increased to 225. So we take the base will be the previous index number will become the base. The current value is 225. So we need to make the adjustment accordingly. The variation, these fluctuations, the changes, those things also have to be accommodated. So when we are accommodating that, Okay. The expected cost index is given as 225. If that is the case, um, without taking the index value, we could calculate the total production overhead, total expected overhead cost in 20x6. Only considering the trend. Trend is given by an equation y is equal to a plus bx. Only taking the trend, we could calculate the production overhead to be as 212,560, 212,560. But then we also have to incorporate the expected cost index. So for that, let's take it up. The base is 205. So without making any, without considering any index change, see when the index, assuming that the same index of 205 exists and the value, calculated value is 212,560, but then they have estimated that the index from 205 has moved up to 225. So if it has moved up to 225, making the adjustment, incorporating that increase in the price, the prices are increasing, the costs are increasing from when it was at the only these details, the calculated value comes out to be as 212,560. But what when the cost index is also considered? So when the index was 205, the trend suggests that the production overhead should be 212,560, but then it rose to 225. So proportionately change that. Okay, 233, 298. Let's take 139, 140, both of them to the Excel sheet. 139, 140. How many days did we finish? Totally, we are supposed to have 20 days, no? 20 classes. So 20 into 2 is 40. By any, do you have any idea how many we've done? Because in between, some of them, um, since there was a clash, I cancelled it, or rather postponed it. So do you have any idea about which day is this?
Ma'am, you
Any
want to know how many hours are completed?
40 hours. 40 hours is the
No, ma'am. I mean currently completed. You want to know how many hours are finished?
sorry, I didn't get you.
Ma'am, you want to know how many more hours are left?
No, I just, if you have a count about which day is this one, how many hours are completed? Yes, how many hours are completed? So maybe we must have finished 20 hours or more than 20 hours.
Ma'am, we finished 27 hours left.
27. So we still have 13 hours left.
Yes, ma'am.
13 hours is sufficient time. I think. How many more topics are there? 2 or 3 more topics are there. Let's see how does it work out. (139) question number 139. Excel only, no? You are able to see.
Yes.
Okay. The overhead cost of RP have been found to be accurately represented by the formula y is equal to 10,000 plus 0.25x, where y is the monthly cost and x represents the activity level measured as the number of orders. Monthly activity levels of orders may be estimated using a combined regression analysis and time series model. A is equal to 10,000, 100,000 plus 30b. First one is overhead cost of RP. Then monthly activity level. Okay. Then we have where A represents the deseasonalized monthly activity level and B represents the month number. In month 240, the seasonal index value is 108. The overhead cost for RP for month 240 is how much? Question number 139. Y is equal to Y is representing overhead cost. The question finally, what is asked is find out what is the overhead cost. Find out overhead cost for RP for the month 240. The equation is given as $10,000 plus 0.25x, where x represents the activity level measured as the number of orders. After that, one more equation is given. We have A is equal to 100,000 plus 30b. And what is this A? A represents the deseasonalized, no seasonal variation. Of course, there's okay, deseasonalized, nothing, no seasonal variation included. Deseasonalized monthly activity level, and B represents the monthly number. B represents the monthly number. So B is the number in month 240. The seasonal index value is 108. First, we need to find out what is the X represents the activity level. So if we know the activity level, that activity level will be substituted here to find out what is the overhead cost. From this equation, A is equal to, what is A? A represents the deseasonalized monthly activity. So A is Deseasonalized monthly activity. So in other terms, if we find out what is the value of A can be substituted there in place of X to arrive at what is the cost of overhead cost. X represents the activity level. A also represents the activity level, but that is the activity level which is deseasonalized. So in month 240, the seasonal index value is 108. 108. Okay. Let's first calculate the value of A. A is equal to B represents the month number. Month number is also given. Number is 240. So deseasonalized value of A will be 30 into 240. Once it is seasonalized, it becomes X. As of now, this is only deseasonalized value. So deseasonalized value without including the seasonal index number, this stands at okay. Once we include the index number, the variation, the fluctuation in the prices, that index number indicates what is the changes in the price or cost. The prices, how do they change over a period of time? That is represented by an index number. You will learn that in your BCom syllabus. We are not spending anything on it. How do we calculate that? Various ways, various formulae are there. But in simple terms, what is index number? It indicates how the prices have changed, by what percentage or by what number. Index value is given as 108. So the base, the previous period, because like in the previous question, we were given the index numbers like over a period of time. From 189, it moved to 205. From 205, it moved to 225. But here we don't have the index numbers over a period of time. It is simply, it says that the seasonal index value is at 108. So that has to be incorporated. We have to take that to be as 108. If we take that as 108, include that as 108, then how much is it? So this represents this particular deseasonalized value without including the index number should be taken at 100. But now how much is the change? The change is at 108. If it is 108, this is how much? This is activity level or deseasonalized activity level. This is index number. Because there's no other information given, we just take that whatever is the previous period or previous values, that should be at the base. Base is always 100. So now it is at 108. So how much would that be? We take 107 to 100. So we are moving from A to X. Since we include the seasonal index, that A becomes X now. A is only when it is deseasonalized. So first we have to make that as seasonalized monthly activity or monthly activity level, which is equal to X. X will become, we take it as 107, 200 into 108 divided by 100. So that would be After we get what is x, we have to also substitute, isn't it? X is equal to now 115,776. The question is about y. Y is equal to, we have to calculate what is the overhead cost. Y is equal to 10,000 plus 0.25 into 115,776. This is equal to, let's put it as this is not MCQ. Okay. So the overhead cost is, how much is that? 38,944. So right, overhead cost is equal to 38,994. We'll continue. Today is Friday, no? Thursday. Tomorrow is a holiday. We will meet again on Monday. Is that clear?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay, then good day.
Thank you, ma'am.
Thank you, ma'am.
Thank you, ma'am.